Welcome everyone to the Wealth Talk podcast. My name is Zach with Brick by Brick Wealth, and today's episode is very exciting. It's an episode, something I could not wait to bring to you guys. Today, I am going to be talking about the 5 questions that all new real estate investors ask. And let me tell you, I've been doing real estate for about 10 years, and I've had the pleasure of helping a ton of real estate investors jump in to real estate investing, buying their first properties, being able to help manage their properties. And I've seen a few things. I currently have a couple of mentors and coaches myself. They've taught me a lot. And these 5 questions are so important, um, because getting the answer to these 5 questions is going to make a huge difference in how you approach real estate investing, how you actually go forward in growing your portfolio. Because we all have to start with one, but then there's always that question of what's next. So hopefully today's episode is going to get you started on that journey, going to get you thinking outside of the box and a little different about real estate investing. And one thing that I want to mention is all of these questions, if you have them, they're valid. They are extremely good questions. Don't feel bad about saying, you know what, I don't really know. It's kind of embarrassing. Everyone from the richest billionaires to the smartest people have always started where you're starting, where they did not know something. They started asking questions. They started reaching out to other people who have done things before. And who knows, you may be that person that hears something and a new idea comes from your brain, something you think of that completely revolutionizes the entire real estate industry. So don't feel that your questions are dumb or don't make sense. They are good questions. So, with that being said, first question, I love this question because this is where I hear, matter of fact, I just heard a good friend of mine. She was like, I want to get into real estate investing, but where do I start? And that question right there, I love because that starts us down the path to real estate investing. That question and that question alone is the most important question anyone could probably ever ask is where do I start? So let's talk about it. Where do we actually start this real estate investing journey? How do I know, number one, how do I know real estate investing is for me? If it is for me, how do I know I'm ready to invest? If I'm ready to invest, who do I talk to? Where do I like what is this whole process? Well, let's simplify this. Let's break it down. Let's answer this first question of how do you know if you're ready to start investing? Well, there's several factors. Number one, if you have a job that's W-2, 1099, whatever, and you enjoy your job, or let's say you enjoy making the money from that job, you're going to have something that everyone in this world has, at least in this country, is income tax. And that is just a portion of your income that goes to the government in taxes just for simply working and making a living. Now, the more money you make, the higher of a tax bracket you get into. And you start getting into high tax brackets, the government and Uncle Sam, oh, they absolutely love you. The IRS becomes your best friend, whether you want to or not. So if that's you, you are absolutely ready to start planning and to start thinking about buying that first investment property. Investment properties, without a doubt, will help you save taxes. There's so many benefits. You can look and ask any tax professional, CPA, whatever. Real estate has probably the most favorable tax laws out of any industry. They are incredibly favorable, and there's a reason for that going way back to when this country was started that we won't get into on this episode, but we will. So stick around for that. But if you are that person, real estate investing is for you. Let's say you own a business and you're an entrepreneur and you have a good source of income. Let's say you're making 6 figures a year. Real estate is for you because you can. Now you have to get strategic with planning with a tax planner and a CPA, but you can tie in real estate to your business and help you to offset some of your taxable income. Again, work with a CPA and a tax professional. That's not me. So do that. But if you're that person, it is right for you. If you're young in your 20s, just got started in your career and you're making some decent money, guess what? You are also a person who should definitely consider and start real estate investing. So at the end of the day, anyone and everyone should think and consider real estate investing because it is so powerful. Cash flow, equity, appreciation, and we'll talk about all these terms, so don't let them confuse you. But there's so many benefits that far outweigh the negatives. So another the kind of the next step to that question of where do I start is you want to start planning for your down payment because that is kind of the next step. Because once you've identified, hey, I'm the person who needs to get into real estate investing, you want to start planning your down payment. So here's how you, because we all live in different parts of the country. I live in the South where home prices can be very favorable compared to, upstate New York, LA, California, some of these more expensive areas. So what you need to save up is going to completely depend on where you live. But here is where you can find out how much you need to save. So working with if you're not an agent yourself or if you don't really know that market, and if you're a beginner, you probably don't, but nothing wrong with that. You're going to want to find a agent in your area who knows that market. Their real estate company might even actually own a property management company. They're going to know that market in and out. They are going to know how much rent is good in that area. They're going to know good properties. They're going to know all of these things. So that's where you need to start because you're going to say, hey, I want to start investing in real estate. What is the average price of a good rental property? How much in rent can I get? Because that is the information you're going to take directly to a lender and say, hey, I'm thinking about buying a house for an investment property. This is how much average house is going to cost. This is the rent. What kind of a down payment am I looking at? They will give you that number. And from there, it's just simply saving up that amount. Now, here's a few tips on how you can save that amount. If it's 50,000, 80,000, whatever it is, set a budget. Going into this, there's gonna be so many things that you can't control. But if you can control, hey, every month I'm gonna save up $100, I'm gonna save up $1,000, whatever it is, start saving now. If you get a bonus from work, if there isn't no absolute emergencies, save that bonus, set it aside. A little side note, you can stick all of this money into a very safe investing type account to help offset, it just sitting there. But saving the money is where it starts. And I know it could take 8 months, it could take a year, but it's worth it because in the end, you will have a property that is going to cash flow, give you tax benefits, appreciate, and will lead to bigger and better things. So that is where you start. It's not complicated. Yes, there are some moving parts, there are some steps. So just simply to recap, first, you're going to recognize I am a person who needs to invest. Second, you're going to talk with a local agent to figure out how much prices are in your area. Third, you're going to talk with a lender. How much do I need to save up for a down payment? And fourth, save for that down payment. So four simple, quick steps that you can implement over the next few months. So, second question, what type of property should I invest in for my first property? Now, this question is great because it involves something that is called house hacking, and we're going to talk about that. So, house hacking. Oh, I love this one because if I would have known about house hacking when me and my wife got married, we more than likely would have done this because and I'll explain the whole house hacking process. It's a beautiful process where you can buy an investment property, live in it, still rent out the others for a very low down payment. You can move out after like a year and it'll cash flow. It's phenomenal. So to specifically answer what type of property you should be getting, I always recommend single family homes or maybe even townhomes. Several reasons for that. Usually, and probably one of the biggest things is Single family homes compared to even townhomes or condos are going to have extremely low, if any, HOAs. The insurances are usually a lot cheaper, and they appreciate in value a lot more. So, single family homes are phenomenal ways to start your investing process. Now, there can be townhomes that are great, so don't discount them. But one thing that I would kind of stick away from, now there's always going to be a diamond in the rough, no matter what property it is going to be condos. Condos are usually not good. They usually have high HOAs, high insurance, and even a lot of times trying to buy one or sell one is going to be dependent on how many other condos in that HOA are owned by investors, because there's always going to be a limit based on the lender. So, single family homes and townhomes are your best. Now, to the house hacking. House hacking is a beautiful process. So, usually with an investment property, you're going to get what's called a conventional loan, 20, 25% down. But with house hacking, you can get what's called an FHA loan. That is the FHA, Federal Housing Administration. It's government's loan, government backed loan. Usually those are 3.5% down. So you're saving, what is that, 16.5% down on your down payment? That's massive. That is a ton of money. So the only catch with this is that you have to live in that unit for 365 days before you can move out. So it has to be your primary residence for 1 year. So where can you do this? Well, you can do this in a single family home and maybe rent out a bedroom or whatever if you want. The best places to do this are going to be duplexes, triplexes, and fourplexes. And it is capped at 4 units. Now, at the time of recording, it's 4 units. In the future, it may be more. So definitely check the updated laws. But as of now, 4 units. You live in one of those units, and the other, either one, two, or three, you can completely rent out. Usually, if you have a fourplex, especially, those rents will easily cover your mortgage and you'll be basically living in there completely free. A triplex, definitely still possible. A duplex, again, it's still possible, but with the fourplex, it is way easier to live in one and rent out the others and have that pay for your mortgage. After that year is up, you can move out. You can go wherever you want to go. You can buy a single family house. And guess what? Now you have a rental property that you did not put a lot of money down. And now you have all of this cash flow coming in. And it is gonna, and usually insurance on fourplexes are amazingly cheap compared to duplexes, triplexes, because you're really maximizing that one building. Fourplexes is where, if you can, please get into a fourplex. So, house hacking or a single family home, that's going to be your best bet. So, third question. Uh, I do this all the time. This is a part of my job. We have a property management company with our brokerage and real estate company. How do you find good tenants? This is a big one. Tenants, you have to remember something. Tenants pay your mortgage. They help give you cash flow. They improve your appreciation. They improve your equity. Tenants are everything in this. You have to find good tenants. Now, with that being said, people are unpredictable. I think I said this in one of my other episodes. People are very unpredictable. You don't know what someone is going to do. You can completely screen them, vet them out. You can think you know their whole life story. So all it takes is one thing to go wrong, something to happen in their life where all of a sudden they have a decision to make. Do I pay this rent or do I not pay this rent? Do I eat today? And that is a very real circumstance that can happen. And if you're not careful, you won't know how to handle this. So, how do you find good tenants? Number one, I would start with hiring a property manager. Property management is going to not only be a write off, but it is going to take away all the headaches. It is going to take away all the hassle. It is going to take away all of the thought process of finding tenants, collecting rents, maintenance, all that. But 99% of the property management companies out there are going to have some sort of credit screening, some sort of screening process in which they collect The tenant's driver's license, social security, they run their credit, they're checking for other late fees or past evictions, they're checking for all that kind of stuff. So if you can, and you are someone who does not like extra headaches, which I don't like extra headaches, please call a property manager. Research a good property management company in your area. A lot of local real estate agents and real estate companies do that. Talk to them, interview them, find a good one. That'll help. Now, if you don't want to go down the route of property management, which if you're a hands-on type of person, or if you just have a lot of time on your hands, you don't need a property manager, which if that's you, then that's great. Then what you can do is you can get your own software. There's tons of software out there that'll help you manage your own properties, all the finances and stuff like that. And you can run the screening yourself, which is completely doable. That is the first step. Now, second step, verify employment. I can't stress this enough. Verifying employment is huge. That tenant can lie. It's unfortunate, but tenants can and will lie to you about their employment. And so don't take their word for it. It's not that you don't trust them, it's that you don't trust anyone. You have to call their employer. Here's a few questions to ask their employer. Are they still employed? Are they gonna be employed in the next few months? Usually they'll know if they're, getting ready to fire somebody. And number three, do they actually make the money that they say they made? You verify that, you run their background check, you check that, they don't have any evictions, any like crazy late fees. You check that they don't have a ton of debt, that they really can't afford this property, because they can make a lot of money, but if they have a lot of debt, then they probably can't really afford your unit. That's something you want to check as well. Um, so again, if you can find a property manager, do it. If not, find your own screening software. Of course, you want to talk to them, you want to show them the property, get a feel for them. I can't underestimate, or I can't undervalue how important it is to just talk to that person, get a feel for them, because we can feel when people are trying to be shady, when they're trying to, get one over on you. So doing that, that is a huge step in screening your tenants. So let's move on to this fourth question. Um, and I got a couple of examples I want to use on this fourth one. So, how do you pick a good lender, and how do you know if the loan terms are actually good? This is a phenomenal question, because most lenders and loan officers, they've been doing this long enough. They know the terms, they know what things sound like. They know this game. And if you're a new investor, you may or may not understand at all what a good loan looks like. You may not understand what types of loans there are. So let's start with, how do you pick a good lender? So number one, a good lender is going to be completely open and upfront with you. They are going to be completely willing to talk to you about anything. They will return your calls, they will return your emails or texts, however they communicate. You want someone that's going to communicate things effectively. You want someone who's not going to get irritated by the fact that you're a new investor just trying to ask questions. That's the first thing. Number two is, you want to ask that lender, what type of loans do they usually do? If a lender tells you they usually do residential, they're probably not going to be the lender for you for investment property. And here's why. A lot of lenders say they can do investment property loans, but what they actually mean is that they do third party loans. And that means that they themselves are not servicing or actually giving you the money for that loan. They are outsourcing it. Now, what that does is that allows that lender to put a third party broker fee and add it to your closing costs, which can easily be 1 to 2% of the final sales price. You can easily be spending 3, 4, 5, 6 grand in just that. So that is the first question you need to ask them. Do you usually do investment property loans? If they say yes, we do this all the time, Second question you have to ask them is, do you service this loan yourself? And do you have a third party broker fee? If they say, yes, we do, I would recommend finding another lender because that is going to save you a lot of money. There are tons of lenders out there that do investment properties that service their own loans. So that's just a little tip to help save you a lot of money. Now, second part of this question, how do you know if the loan terms are good? So usually I always tell all of my clients and people that I coach, please shop around for different lenders. Don't just go with the first lender you see. You want to shop around. You want to check out different lenders, different rates. Now, usually the interest rates are going to be very competitive. What you're looking for are their fees, their origination costs, their attorney fees, their third party broker fees. All of this is where you could easily save thousands and thousands of dollars in closing costs. It could be the difference of literally $15,000. And here's the example I was talking about. I was working with a client of mine. She was working on doing a cash out refinance on a property she owned free and clear. She was going to pull that money out, use all of that to go purchase another investment property. So this is a way to turn one property into two, both still cash flowing. The first lender, it looked kind of good. It looked all right. And then we started getting the closing documents maybe a couple of weeks before closing. And she called me and was very, very worried and said, hey, this just doesn't look like that. It's that good. All of a sudden, I have, between both the deals, like $25,000 in closing costs to pay for on top of the down payment. And I said, okay, well, send me the loan documents, send me all the HUD and let me see it. And I started looking, and lo and behold, third party broker fees, origination fees were out just astronomically high. And so I said, okay, let's go shop around. We shopped around and we found another lender that I use in my network, and had them run the same numbers. It was actually a better interest rate because they serviced the loan. And she literally saved like $15,000 in closing costs. That is a ton of money. She walked away from the cash out refinance and the purchase with like 20 grand in her pocket. That is nuts. That's the power of real estate. That is exactly how real estate is supposed to be done. If she would have went with the first lender, she'd only had like 4,000, which is still not bad. You still got money, but 19,000 versus 4,000, huge difference. And that is just one example. So never ever just go with the very first lender. Always shop around. Even if that lender, so in this example, if she were to go back and buy another property, use this lender that beat the original lender, I would still tell her, shop around, check another lender, see if there's someone that's even better than that or that's willing to beat that to get your business. If not, no problem. You still have this original lender. And if a lender is good and they know what they're doing, they completely understand that. They'll understand that, hey, another lender just really wants that business, and they're giving it away for free almost in the hopes that you'll bring them repeat business. So never ever just go with the very first one. So that is hopefully some good tips and something that you all can take away, because I've seen so many people get burned by rental properties and they didn't even know that they were getting burned. They just thought, well, this is all I can do, so I'm just going to do it. But it's not the case. Okay, so the fifth question. I love this question. I get this question all the time. How on earth will real estate help me with taxes? Why is it so beneficial? I hear people say it's good, but how is it good? Why? So I alluded to this earlier that real estate has the best tax laws in all of almost any industry. Automakers, oil, banks, doesn't matter what industry, real estate has the most favorable tax laws, and it's not close in my opinion. Now, some of you CPAs out there can tell me what you think. I'd love to hear from you. But in my opinion, they are amazing, way better than stock market. There's so many ways to avoid paying taxes while still bringing cash flow. It's crazy. So, first, you should always hire professionals to do your taxes. A CPA, a tax planner, get someone who knows what they're doing because I am not that person, but here's some tips on and here's some ways that it'll help you. So number 1, write-offs. Write-offs are simply expenses that you have on your property that will offset any cash flow that you have coming in. It'll also help to offset any cash and income you're bringing in from your regular W-2 job. Now, again, this is why you need a tax planner and a CPA to do this the correct way so the IRS doesn't come after you. But write offs are huge. So, examples of write offs are going to be property management, paint, if you have to replace flooring, pest control, a new roof, insurance, taxes, your property taxes, all of those are considered write offs. So, another way that it's going to help you is cash flow. So if you do your taxes right, that cash flow that you're going to bring in is going to be completely tax free if it's done correctly. Who doesn't want tax free cash flow? If you don't want tax free cash flow, raise your hand or put it down in the comments because I wouldn't know a single person who would say, yeah, I don't want tax free cash flow. I want to pay taxes on all the cash I bring in. I don't think anyone's ever said that. So another way this could help your taxes is it could easily, because of all the write-offs, lower your tax bracket. Now, there's a software that is coming out. I'm not going to mention it yet, so you're going to have to watch some more or listen to some more episodes, but there's a software coming out that will change the way all of this is done. It integrates tax planning, tax codes, appreciation, depreciation, everything about rental properties into one software and allows you to plan for the future. So you have to listen in the next coming weeks, next few episodes about this software. It's amazing. It's hopefully coming out soon. It's mind-blowing. So hopefully today you have heard a question that you have had in your brain. I know I've had these questions and more when I first started out. And let me tell you, any of these questions that you have are completely normal. And if you have any more questions, and if you're watching this on YouTube, put your comments and questions down below. Feel free to reach out to me somewhere down here. I'll put all of my social media links so you can reach out to me. You can send me a message. Ask me as many questions as you want. I want to know what you guys are thinking. So until I see you guys next week for the next week's episode, let's remember to stay wealthy.